In this video, we're going to look at how to prepare an indirect statement of cash flows. So we need some facts first. Equipment of $680 was bought, and cash dividends of $808 were paid. We're asked to create an indirect statement of cash flows. So the first thing we do is look at the income statement, and we also have the balance sheet. The income statement here is going to turn out to be an important statement. Notice it ends in a net income of $1,731. On the balance sheet, notice that we have cash going down $10. That's going to be important later. Notice that accounts receivable goes up $250. Notice that inventory goes up $285. Notice that accounts payable goes down $150. All of these are going to be relatively important as we look at how to do the indirect statement of cash flows. So first, let's take a look at the operating section. So we have the title, which is not really part of the operating section. We have the name of the company, the name of the statement, and year ended, implying that it started January 1st, ends December 31st, 2014. So we first do the cash flows from operating activities, and this is not so much a specific section, but rather I call it a reconciled section, because we start with net income here, and that's $1,731 from the income statement on the previous page. Notice we add back depreciation of $412. That's because depreciation is always non-cash. Think about the journal entry: debit depreciation expense, credit accumulated depreciation. Now look at the three accounts that I told you to look at from the balance sheet earlier. Look at how we're representing them here. The change in accounts receivable was a positive change, and so we had to subtract it here. We subtract $250 from net income. Inventory was a positive change to a current asset, and so we subtracted that as well for $285. Accounts payable was a negative change, and as a result we subtracted that for $130. Well, adding and subtracting everything to net income, adding the depreciation, subtracting the other things, leaves us a cash flows from investing activities section. And that's a misprint there. That should say cash flows from operating activities. I'm going to fix that as we talk. That's cash flows from operating. And the total is $1,478. Cash flows from investing activities is merely the $680 that we talked about earlier in the other facts. Cash flows from financing activities is merely the payment of dividends of $808. Both of these are negatives: the purchase of equipment and the payment of dividends, because they're both money going out. So when we add the $1,478 cash flows from operating activities, we subtract the cash flows from investing activities, $680, and subtract the payment of dividends, $808. We come up to a net increase in cash, which is really negative. And it's fine to show it this way. I could have also said net decrease in cash, but the increase in cash with a negative number clearly reflects what we have here. Then we have the cash balance at the beginning of the year and the cash balance at the end of the year. And notice this equation must work. Net increase in cash is negative. Cash at the beginning of the year was higher. Cash at the end of the year is lower at $210. Hope this is clear and made sense to you. Cash flows, or I should say cash flow statements, are often more complex than this. It's a very simple, very basic one. Let me know if you have questions. Take care.